Okay, cool. All right. I think you see that right, sir? Okay.
Yes, that's
There we go.
fine.
Okay, perfect, perfect. Okay. All right, everyone. Welcome back to the 36 minutes on this wonderful, wonderful opportunity that the Trading Pit has afforded us to not only bring great educational insights and how you can use some really key concepts and integrating them into your experience with the Trading Pit, but also raise awareness for some really good causes out there. Myself living in the United States, having served in the Marine Corps for almost 9 years, veterans causes and helping out veterans it's a very important thing for me. And any chance we can bring awareness to that, we do that. Okay, so moving on. The first webinar we did was on constructing a business plan. That was 2 weeks ago. I encourage you to reach out to Alex and or look at the recording links because that is archived and you can check that out and go over really the key concepts. If you're going to be in this trading business, if you're going to look at a great company like the Trading Pit that can serve as a wonderful place to source trading talent, you need to have a trading plan in place. And so webinar one addressed really the big philosophical questions and how to answer those questions to have in place for what you should be thinking about when you're going to build your trading business. So now we move to webinar two, okay, and that is constructing a trading journal. And so now we're going to begin to break down things you can do when you are running a trading business. And the first part is in terms of is how you keep books and records, because your trading is a business. So what is it that you're doing to construct a trading journal around that? Real quick, again, I was a U.S. Marine. I spent 25 years in the capital markets. I wrote the Global Macro Edge. I'm a law school student here in Las Vegas at the Boyd School of Law, and I speak 4 languages: Japanese, Chinese, Portuguese, and Spanish. And okay, and so so now we're going to go over some things about what makes a good trading journal. My game plan for this, because we don't have much time, because I know that a lot of us are just finishing up the American set, the U.S. session. European session is coming to a close very soon, and then we're looking at, at least on the equity market side. So what makes a good trading journal? All right, I'm going to focus on 5 things that I believe make a good trading journal, and then we're going to also talk about some key fundamental events coming up this week, and then we'll save the end for some Q&A. And ideally, we want about 12 minutes for each one of those sections. But we may end up doing 15 to 18 minutes of what makes a good trading journal, and then I might do 5 to 8 minutes of the next week's of market action, and then we'll keep 3 to 4 minutes of Q&A. But don't worry, as Alex will post, all of your questions can be emailed to Alex, and I will personally make sure if any of them request my feedback, Alex and I will work together and we'll make sure that those emails get responded. So please reach out to Alex and he will make that happen. All right, so what makes a trading journal good? All right, and I think there are 5 things, and I talk about them in chapter 8 of the Global Macro Edge, which again, you can get the first 3 chapters for free. So email Alex at the Trading Pit, and you can get those first 3 chapters for free. But here are the 5 things I think if your trading journal has this, it's gonna provide a lot of value in your process. The first is consistency, and this is really about you, okay? And that is it. Listen, while something's better than nothing, if you only write in your trading journal once every 6 months, then maybe that's sufficient because you're memorializing stuff and giving your investment time frame that might work. But if you're trading 3 times a week, then in my opinion, you should be writing down in your trading journal at least twice a week, optimally 3 times a week, but at least twice a week, because maybe one day you trade, absolutely nothing happens, or maybe it's incidental, but most of the time that you trade, I do it every time I trade, but most time that you trade, about every time you trade, you should be taking notes, okay? You should be writing your thoughts down. You should be incorporating stuff that you have noticed into your thing. And I'm sorry if I cough a little bit. Was battling a flu over the weekend. And I came out of the other side of that. My amazing, beautiful Greek wife got me through that rough time. So Merry Greek is what I say, Alex. The second thing about it, so that consistency is really important, and that consistency also helps you with formulating your thoughts. Yesterday this time I saw this, I thought that, because a lot of us, and there's a lot of cognitive biases that go into the market. By journaling more and more what it is that you're seeing and consistently recording what your thoughts were before the fact, we don't go back and retrofit. We don't go back and past posts. We don't go back and through the benefit of hindsight say, oh, I would have done this or that. The more consistent you are with your trading journal, the better you can, make that happen, make that work and be consistent. Okay, so that's the deal with that. The second thing is have it organized. The third thing is I want it to be referenceable, meaning that you can go back and find things in there. The fourth thing is that it easily captures your ideas, and I'm going to break down all of these independently. And then the fifth thing is that it addresses aspects to make you a good trader. In other words, you can have a personal journal, but we need a trading journal that also incorporates your trading business into that. Okay, so let's break down each one of those in a little more detail. All right, like I just talked about consistency. I just mentioned about why recording as often as possible is really critical. And sometimes it happens to where you're in a trade. For me, that consistency not only is about writing, but also what I'm writing. And I'll cover these in a few later versions, but I'm big into doing a lot of screen captures. Okay, so screen captures to me are very important. And that gets into some of the referenceable. Is it referenceable? When you go back in a year, 2 years, 3 years from now, that's a big thing. So this consistency in what you do, so one thing I talk about in the Global Micro Edge is that you want to give yourself an overall grade for the trade, how you executed. And part of the grade I give myself for the trade is how well I planned out, how well I synthesized the information, how well I prepped my software, how well I prepped my trading levels, how well I prepped my contingency plan, and then how well I prepped the post-mortem, which I'll get into in a little bit. But over time, this consistency really makes it easier to reference things, and we live in a very data-driven world. I think it's what's helped build the trading pit to the prominence that it has, is understanding that there's a lot of trading talent out there. It's not necessarily efficiently sourced. And so if you can find a way to source trading talent that in this day and age can render payoffs at an order of magnitude as to what you might find from a traditional investment. And that's critical. Okay, organized, all right? It's really important that there's a continuity and a consistency. We talked about that in the first issue, but that your trading plan is organized. And by organized, that I mean that there's a template behind it. The first template means, maybe what the results were from me. So my results today were I made X or I lost X, okay? And here's the distribution of that. My account lost this amount. My account made this amount. Here's the products I did it on. Here's my game plan going in. Here's what I was risking going in. And here's what ended up happening. And that's the template that I talk about. Then the next part of the template can be, what were the products that I traded? Let's show those products. Well, how long was I in the trade? What was my game plan? How did this set up according to what I thought it was? And so that, again, is having everything organized. So when you look back over the last 50 trades you made, that trading journal becomes a real weapon. And now we can do what's called weaponize the data, all right? Because now there's this consistency, and the more, you form this habit, which is, of course, it's December 11th, we're all looking at, a lot of us naturally look at the calendar for when we want to implement new habits. This habit of organizing your trading plan, organizing your trades, it's a big part of that, okay? Another thing, and this is not just with trading, it's a lot of disciplines out there, that if you put the work in up front, it makes it easier on the back end. So what does that mean? So if every day, like we said in point one, if you're consistent with what you record, if you're organized with what you record, okay, if you are consistently doing this, it makes it a lot easier on the back end or when it goes back to review. All right, you can, depending on the structure you're using. I personally use Evernote. I think Evernote's a great thing to use for recording trading ideas. Or there's a lot of cloud-based journals out there. That's a great way to do it, and I'd go from there. Referenceable. Okay, so another thing is, if I'm making this feeds back into the organization part of it, but if I want to make something referenceable, is that for every time I trade the euro, okay, is it going to be referenceable? Can I find it? All right. So using a structure, using a system that if I want to find euro and I want to find double tops, this trading pattern, okay. So now I can go back and find the last 8 times I've traded a euro on a double top, and I'm going very basic here as an example. All right. Or the last 8 times I traded euro on an ECB decision. Okay, so having these reference points really matters, because what happens is over time, I mean, I've been keeping trading journal for over, 15 years now. I mean, I've been keeping it longer than that, but in terms of the current format, and so now I can go back and say, okay, back in 2013, I want to look at these events right here that I traded, or back in 2015, back in 2019, when I did that, what was something there? And so sometimes, like, you come up with really good trading ideas, but the market regime is just not the right regime for them. Okay, so having this trading journal really becomes your intellectual property. Okay, it really becomes trade secrets developed from this, your proprietary, I mean, your time, and this becomes its own unique, customized, idiosyncratic reference point, and it's something to behold, it's something to watch, it's something to witness. So for me, for example, I start a new folder every year, a new folder for a new trading strategy, a new folder for a new trading project. I try and keep detailed, but at the same time, I want to keep stuff fairly streamlined as well. I don't want to have 5,000 folders. So I try to have a main folder or multiple main folders, but then subfolders from there, so that on balance, my hierarchy, if you will, my reference point, my hierarchy is well, it looks like a pyramid and not like a reverse pyramid. We want to look like a natural pyramid, not a reverse pyramid. Okay, the next thing. All right. Again, a trading pin needs to also capture your ideas. So if you come up with certain market observations, which can be some of the most powerful things that you notice, just random observations that when you really give them some thought, are like, wait, I want to really explore this. Well, are they capturable? I mean, were they, did you write them in a way, or are they structured in a way that you can actually go in and look at them and think about what it is that you're trying to accomplish and what it is you're trying to do? And so, I mean, imagine, again, people in the trading pit, you guys trade with different time frames as you trade these markets. And so are you capturing your ideas? Are you keeping a separate folder that, okay, I put this idea in my main trading folder that goes with my daily trading journal, but now I want to make sure that it's on my to follow up folder. Okay, and so I keep a follow-up folder of these sort of ongoing ideas that you have. And you can decide, again, let's go back to the first webinar we did on constructing a trading plan, is that once every 2 months, 3 months, 6 months, I go back to these trading ideas that I have, and I evaluate them against the current market. Hey, I had this idea 6 months ago, 9 months ago, and I explored it, but it didn't seem to make sense then. Could this possibly make sense now? And so this also becomes part of, as you think about your trading business, that you can walk people through your process, and you don't have to give anything away proprietary, but you can just being able to explain that this is the process you go through. That has the chance to build a lot of comfort and a lot of confidence from investors. And so if you, sorry, if you show the, let me get some water, sorry. And so if you can show that you've gone through this, and you can talk to people about what you do, if you are ultimately looking to raise money, if you are looking to expand your business, being able to speak to these things, even generally, can go a long way and help you build your business model out. Okay, so let's get into some specifics that are in my trading journal. Naturally, like I talked about, I put my P&L in there. I put fills from positions in there. A pre-trade game plan, a logic behind the trade, the risk allocated to the trade, what my emotional balance is. So pre-trade game plan is really important. Did I have like one line there, or did I really plan this out? Some trades, they naturally happen to you in real time. You adapt to them. That's fine. Other trades you stock out. If you think that, this pullback in gold and silver, if you think that, you want to buy gold here, you say, well, I'm waiting for gold to get down to 1950 an ounce. Okay, that was high as 2150. I think at 1950 I want to buy it. It's 4 days away. I think in the next 4 days, if it gets to 1950, I want to buy gold. So you have this game plan. Why do I want to buy gold? Well, I think it's, has some potential to go much higher. And if it doesn't, it still can do well because it's going to be really oversold at that point. Okay. So that's your game plan. Sorry. So the bottom line is, you have these things. I also put the logic behind that trade, which I just walked through. The risk allocated to that trade. I might risk 2% of my portfolio in that regard. And then, how am I feeling emotionally? Am I coming off of a couple of losses where after 4 or 5 losses, all of us feel this way? we feel desperate. We feel like we want to make that money back. Okay, so how is my emotional balance in that regard? What's my intuition tell me about this trade? Is my intuition really strong? Is it really controlling this? And then really, every trading plan has a postmortem, all right? And that postmortem is really important because it goes over, how you did, how you executed, what you didn't execute, what was learned, some of the thoughts you had, some of the things the feelings you had during the trade. And that postmortem can often spawn, is a critical part of the trade prep. And so that postmortem really gives us an idea of where we want to be and sets up the next position. And then when that same trade happens again, you can read that postmortem, and now you have maybe 2 postmortems or 5 postmortems or 10 postmortems, and you can really evaluate, okay, here's a habit of this trade. Maybe I want to adjust the plan because the postmortems in this one has demonstrated this. And again, there's nothing proprietary about what I'm sharing with you right now, but it's just good sort of best practices here. Okay, and let's talk briefly about some future webinars coming up. We got 3 more before I get into the economic data part of this part of the presentation. We got a few more things to go. We got the economic data coming up. We have Q&As, but just real quickly, all right? On January 8th, to start the new year, I'm really excited about this webinar. We're going to talk about the Netto number. And then on January 22nd, we're going to talk about incorporating economic events into your trading. And then on February 5th, we're going to go into incorporating your intuition into your trading. As you know, and this last thing here, the second to last bullet point, the intuition part is really important. And so I think that this doesn't get enough credit, but intuition really is the manifestation of the analysis performed by your subconscious. Let me say that again. Your intuition is the manifestation of the analysis performed by your subconscious. And your subconscious is performing this analysis based on hundreds, if not thousands, if not tens of thousands of hours of life experience, market experience, and feeling. And when that analysis is happening, when that analysis is happening, it can be very powerful. Okay, let's look at the key market events for what's going on this week. All right, so today's Monday, not much so far, but wow, does it get busy in a real hurry. So tomorrow, we have the US CPI. And we had quite a pullback in treasuries, quite a pullback in gold and silver over the last, and in the euro as well. The euro peaked at 110. It's now trading at a 107 handle. So this US CPI number is the last CPI number before, of course, the Fed on Wednesday. But the CPI number should move things quite nicely. The November CPI move gave the market a pretty good move. For the last 2 years, the CPI has really been in play, and so I think tomorrow, the CPI, it'll be month-over-month core. We'll also look at year-over-year, core and year-over-year headline CPI. So those 3 things, that's headline CPI, year-over-year, year-over-year ex food and energy, that's the core, and then that month-over-month core, they'll be watching those 3 accordingly. Then we go to Wednesday, okay? And Wednesday is the Fed meeting, and literally this future webinar here on the 22nd, number 2, when it talks about incorporating economic events into your trading, this section here will maybe resonate a little more with you guys. In the Global Macro Edge, I talk about how I built the software Impact to handle trade economic events. With the Fed meeting coming out tomorrow, Wednesday, we will have there's 8 Fed meetings a year. 4 of them are what's called the Summary of Economic Projections. This is one of those meetings that has what's called the dot plot, or it's where the Fed, all the members of the Fed, there'll be 19 participants, will map out where they think interest rates will be, GDP will be, core PCE, that's the Fed's measure for inflation, and I think I said GDP as well, and unemployment. And so this is going to really dominate the headlines, and that is Wednesday at 2 p.m. Eastern time. So Wednesday at 2 p.m. Eastern time, 2 p.m. New York time, that Fed meeting will control that. Then on Thursday morning at 7 a.m. Eastern time, we have the Bank of England coming out, and then at 8:30 a.m. Eastern time, we have the ECB decision. They come out at 7:45 with some choices, but then at 8:30 comes the press conference. So that's really keeping things really busy this week. And then we have U.S. retail sales coming as well. But those events right there, going to the Fed meeting, are going to really, I think, kind of wrap up this year until we get down to the last week of the year when we'll see some positioning dynamics taking place, and we'll see what transpires from there. Okay, Alex, my good friend, if I get you on here, we're 22 minutes into this. We have 5 to 7 to 10 minutes left for Q&A. If you want to help conduct the Q&A, sir, I would greatly appreciate it.
Yes, so for Joseph, actually, he's not asking, he's mentioning that after the last webinar went and bought your Kindle book and started reading it, and he's finding that your book actually is very good. He's also asking rolling 3 years average. Can you explain a little, please, about the 3-year average?
The 3-year average. Can I get some more context, Joseph, on that? The 3-year average. What is that something you read?
3-year average. Yeah, can you explain it? Yeah, please, Joseph, if you can elaborate a little bit with your question, so it's going to be clear for John. And meanwhile, as we said, because we strictly need to stick to the schedule today with the third 60 minutes with John Netto, any questions that you might think along the way, or anything that you would like to ask, feel free, send me an email. I am in constant contact with John, so his feedback will be always available. So far, I don't get to see more questions, John. I really hope everybody here has the 3 chapters of the book. How do you calculate rolling 3-year average? Joseph is asking.
How you calculate a rolling 3-year average? You take the average point of all 3. I mean, it depends if you want it to be exponentially weighted or simply weighted. If it's simply weighted, you take the last 3 years' returns, assuming that the dollar amount is constant, and you average those based on the mean. If you want to exponentially weight them, that's something you can independently determine. You can put year 1 worth a 20.25 factor, year 2 worth a 0.375 factor, and year 3 worth a year 1 worth something like 0.20, 0.2, year 2 worth 0.35, and year 3 worth 0.45. And you can weight them in that way. Those are questions that you can ascertain based on the circumstance, or based on what you're trying to analyze. Yeah. Hope that answered your question. And if you want to follow up on that, please feel free to email Alex, and I'll elaborate even further. But based on what you asked, that's what I think you're asking. So. Anything else, Alex?
So far not. Let's give another few minutes. Anyway, before we close the webinar, again, one more time, I would like to thank you, everybody, for being here. I would like as well to remind that we do have the next webinar, 8th of January, and actually I'm really looking forward to breakdown of the Netto number from you. It's going to be a very interesting one with the new years. Also, what I would like to remind to everybody is that currently the Trading Pit, we're running our Christmas discount with 25% off. You can find everything in our website. As well as with John, if any questions they are there regarding the Trading Pit, I will be more than happy to give you a detailed answer. And John, I think this is it. We don't have any more questions for now, right?
Thank you, and please support your charities out there. Appreciate the Trading Pit for allowing us to bring awareness to great charities. And thank you, Alex, and thank you, the Trading Pit, and thank you, everyone. Have a wonderful holiday season, everyone. Happy holidays, Merry Christmas, all that.
Thank you, everybody. Yeah, Merry Christmas and Happy New Year's to you and your families. And we're going to be seeing each other very soon. Thank you very much, John. I hope you get better without cough.
Thank you, sir. Bye.
All the best, John. Bye.